In this video, we will be covering the fundamentals of insurance planning. What is the role of insurance in our financial plan? How do we buy insurance? As we work towards our goals, things may not always go the way we plan. We may lose our jobs, which can put a temporary stop to our income. Death, total and permanent disability, or major illnesses can strike, which can permanently cause our income to stop and result in large healthcare and caregiving expenses. These are the three life risks that will impact our financial plans. Insurance planning is important to help us mitigate these life risks. The primary role of insurance is for protection. Insurance serves to fail-proof our financial plans so that if any of these life risks happen, our plans will not be derailed. Insurance may also serve a secondary purpose as a tool in wealth accumulation. However, it should not be the first consideration because there are many other options available on the market for accumulating wealth. Because insurance is only one part of your financial plan, you should aim to buy as much insurance as you need, but spend as little as possible on the premiums. In this video, I will share with you the key steps to planning for your insurance needs and how to make sense of the multiple options available in the market. Identify your purpose for insurance. At the end of this segment, we would have identified the key needs that people generally have. This will help us determine what types of insurance to use, which will be covered in the next video. Step 1. Determine your life stage. Your insurance needs will differ depending on your family and financial commitments. Step 2. What do you need to protect against? Loss of income and providing for loved ones, and large medical and caregiving expenses. Step 3. How long do you need this protection for? If you are protecting against large medical and caregiving expenses, this insurance needs to cover for whole of life. This is because we do not know when these events will occur and they may come during or after our active working years. If you are protecting against the loss of income, this insurance needs to cover us until our planned retirement or dependency period, whichever longer. This is because if you are no longer working, there is no potential loss of income. Also, when your loved ones are no longer dependent on you financially, they will not be financially worse off in the event of your death. Step 4. How much protection do you need? Your preferred choice of hospital ward to seek treatment in will determine the amount you need. These can be broken down into private and government or restructured hospitals. Within the government or restructured hospitals, you can choose from a range of multi-bedders to single-bedder wards, in essence, Class A, B1 or B2C. It is important that your health insurance coverage matches your healthcare expectations, otherwise you might find yourself having to pay more out-of-pocket expenses. In the event of a severe or long-term disability, you may require a caregiver. Depending on your preferred caregiving arrangements, the cost can range from a few hundred to a few $1,000s per month. This can vary from a family member, hiring a domestic helper, daycare services, or residents in a nursing home. There are cost and benefit trade-offs to consider between all these options. The amount of coverage required should be sufficient for your loved ones, ongoing living expenses, pay off outstanding loans, and any life goals you would like them to achieve when you are no longer around. Let us use the example of Amy. Amy is 32 with a 3-year-old son. She wishes to provide for her son in the event of a death until he starts working after NS and university. Her husband and her have an existing bank loan to finance their 4-room flat. In this example, Amy will need to get $840,000 life insurance coverage to ensure that her family will be provided for. The amount of coverage required to replace loss of income in the event that you are unable to work due to a medical crisis is about 4 years of your annual income. According to the Life Insurance Association of Singapore statistics, this will be sufficient to pay for your living expenses during your recovery period. In the event of loss of income due to an occupational disability, the maximum coverage you can get is up to 75% of your monthly income. By now, you should have gotten a good grasp of your insurance needs and gaps. In the next video, we will explore what types of insurance you should get to close these gaps.